thank you for the organizers to inviting us over for this event. So just a quick on Equifax. We have two companies in the country. We run the credit bureau. Also, we have an advanced data and analytics center based out of Bangalore. And in the credit bureau, we run all the lines. We run the microfinance, we run the retail, and we also run the commercial bureau. So that's briefly. We've been here in the country for about 8 years now. 2010 is when we got the license from the central banker to set up the credit bureau, and it's about 8 years of good journey. The talk and the presentation is more inclined to the digital lending space within the fintechs, while we do provide solutions in the rest of the areas. But this conversation is a lot more on digital lending space. Just to give you all a little bit of a perspective on where the trend is headed, I need to just get the slide moving. Technology is not powered by enough data, I think. So while we try and figure out to get this slide, let me keep talking. So the next, what we're trying to cover, give you an indication as to where the markets are headed in terms of the broader lending space. The indicator for fintechs is largely how much of lending happening in the unsecured space, which is a clear indicator of where the fintechs play is coming up. Though fintechs are coming into secured spaces, but the current play has largely been the unsecured space. And if you look at the unsecured space in India, just to reflect it back, a couple of years back, secured was about 50–55% of the overall lending that happened in the country, and the remaining was unsecured. The composition is currently changing. The unsecured is higher than 50%. It is about 50–53% is unsecured, and the secured is running at about 48%. So that's the changing trend that is happening from secured to unsecured in lending space. And within that, you will see here, if you look at the entire loan origination that are happening in the country, while overall there is growth in the book size, the growth on the unsecured is much faster, which has grown about 16% over a couple of quarters. If you compare 2017 versus 2018, there is about 16% growth in the unsecured space. The average ticket sizes have come down in unsecured, which is again a very indication of an online lending that is happening, not a bigger ticket. The average ticket size are coming down in the unsecured space. So that's an indication of where the directions are moving in the country. And if you break that into parts, you'll see the personal loan, the PL side has grown significantly. There is a 33% growth on the PL side of the business. That's a significant growth that is happening. And then comes, your consumer durables and the two-wheelers and others. Consumer loan sourcing is about 22% up. Significant growth in the space in terms of lending that is happening. This kind of sets a little bit of a stage for all the fintechs and the role the fintechs are playing in the country in terms of giving access to credit and then the broader financial inclusion program that we're all hearing and talking about. And there is a study from BCG which talks about a potential opportunity of a 1 trillion opportunity over the next 5 years. So that's the study from BCG which talks about the overall opportunity. You can see the opportunity in front of this industry for the next 5 years, which is significantly large. So given that context, what are the issues that the fintechs are facing at this point in time, right? Clearly, if you break that into 3 or 4 parts, key thing is adapting to the new regulatory framework. Let me give an example of what we mean by adapting to new regulatory framework. So there's a potential consent management approach that is likely to come. How do you ensure that you're able to manage consents online as you process somebody's application for a loan or for a request for information, right? So that's one example. Changes in the verification requirement that comes into play from a regulatory point of view. How are you able to adapt to those regulatory requirements from a verification standpoint? So there are a lot of compliances as the industry moves forward. There are compliance requirements. It's important to have technologies that are enabling such compliances, for a straight-through process. We're not talking about physical verifications. We are talking about digital verifications. So those could be some of the requirements on adapting to new regulatory framework. Data and insights on new to credit customer. Significantly, if you see the growth in the PL, large portion of it is all new to credit. They're first time into credit ecosystem, first time borrowers. Large portion of the traffic that is coming into fintechs are all first time borrowers. So how do you assess the risk or ability to lend to a first time borrower is a critical issue. What we have as bureaus is information of all those who have been in the credit ecosystem. Either they have got a credit card, either they have a home loan or a two-wheeler loan. They have been in the ecosystem for a while. We are able to see their behavior in the ecosystem and potentially predict their potential behavior in the credit ecosystem. But somebody who is new to credit, it's impossible to predict based on these data. So how do we look at the collateral data sets that are available in the marketplace to assess the new to credit? That's a critical element for fintechs to be successful to address the new to credit segment. So we do some work around new to credit as well. One of the work that we've recently done, just to give an example of a work that we've done, so we're working with PayU and their payment gateway in the country to see if we can provide digital insights of people who are not in the credit ecosystem. The way it works is, an organization gets a request for a loan. The request hits the bureau. If they are present in the bureau, we give a bureau report back. If they are not present in the bureau, we actually pass it on to the PayU network to be able to see if he is present, if he or she is present in that PayU or their payment gateway network. Can we give a digital insights? Based on that, lenders can make a decision. It's truly a new to credit solution that we have come up with in partnership with PayU. That's an example of how we are trying to solve this new to credit segment. There are many other things that are happening. If you look at, online, it's you approve a loan or a disapprove a loan in a couple of minutes. Just to give you all an example, every request that comes to us for a credit information report, we respond back sub-second. Anywhere between 700 to 850 milliseconds is what we respond. Sub-second, we pull out information about Nanaiah and then present it back to the lending institution in that pace. So when things are happening at that pace, it's very important to make sure that we've made the right decision, we have reduced the risk levels, we have checked for everything that we need to do is very, very critical. So the decisioning on these platforms are not simple decisions, right? They are undertaking risk, so we need to ensure that the risk is minimized in this decisioning process. So there are online checks that you can do for fraud is something that is being worked as well. As we travel through this whole journey of fintechs and digital lending and straight-through processes, ability to access data becomes extremely critical. So bureaus are one data set, from a credit behavior standpoint. But how do you tap into all other data sets that are available in the marketplace? What is the agility in which you can access the data to make decisions is a very, very important element of it. So I'll talk a little bit more as to how we are enabling this access to multiple data sets so that you can pick and choose what is relevant for your business model, what you're trying to solve in the marketplace, how does that enable you to solve the problem that you're trying to solve is something that we are also working on. So ability to tap into multiple data sources until such time, the country or the world moves into a broader data exchange framework, it's very, very important to be able to tap into that multiple data sets. When you get into a data exchange platform, I think that becomes a lot more seamless and easier for us to access multiple data. So these are broadly the areas that we have identified and the broadly areas that we think are impacting the fintechs and their ability to deliver is very, very critical. So, how do we deliver this through is data and insights. I think data provides a lot of insights. Analytics is largely not simple analytics. We do predictive analytics. We actually predict future in some sense through data. So that's something that we do. Technology is clearly how do you deliver all this to your customer, right? The customer experience is very, very critical when it comes to fintechs and the way you operate. So it's extremely critical to ensure that we have the right technology platform to be able to deliver the services. So we work on these three areas. So analytics is the center which is based out of Bangalore. So we do work for the markets in India, Middle East, Africa, and entire Southeast Asia region from that center. It's quite an advanced analytical center that we have. Data and insights are based out of our bureau and also from an insights business that we have. And I'll talk about technology platform in a subsequent slide. So if you just look at the whole lending journey, right? So I talked about multiple data sets. The credit data which you see on the top is the largest data sets that potentially we have for us to be able to provide some background information and potential behavioral trends of people who are coming into the borrowing and they're coming again into the borrowing ecosystem. But those who are coming new, there are many alternate data sets that are required. For also in the process of a journey of approving somebody's application, you also need to do verification. So we also have a lot of alternate data sources that are available for you all to use it for verification. Example, you want to verify PAN online, you want to verify voter ID online, you want to identify the stability of an address of an individual. So we have solutions and access to data which will enable you to find answers to some of these questions. So those are alternate data sources that you will see here. These are multiple. We have 36 APIs that are available for alternate data sources. So you can choose as to what is relevant for your business and enable those APIs to be able to do the right verification or the right validation. So I talked about some of this, in the entire journey, the credit reports, credit information, the verification, the scorecards. I think let me pause here for a minute. On the verification, I talked about PAN and I talked about voter ID, or I talked about stability of an address. How do you check the stability of an address? If a gas is being delivered to somebody's house for 5 quarters, he's lived in that house for five quarters, right? So that's how you kind of check the stability of somebody's address. So there are many different ways of checking the stability. So some of these are enabling some of those factors. If you look at NTC, I talked about the PayU partnership. We have launched an NTC score for those who are not, present in the credit ecosystem. Are they present in the digital payment ecosystem? What can we say about it? So that's the partnership with PayU that we have got. Give an example of upsell and cross-sell. So one of the things industry is always faced with, how do you leverage your existing client base? Cost of acquisition is much higher than the cost of retention. Cost of retention is much, much cheaper. So we have a solution to review your portfolios and see as to who are the customers who can be targeted for the next best product or for a top-up, for a rollover, any of this thing that you want to do in the platform. So we have solutions that are available for the upsell and the cross-sell side of it. So this is broadly the journey. So we play in the entire this journey. We have solutions that powers this journey from starting from sourcing to the risk side of it, and underwriting, approval, reject, disbursement, and then goes on to collect. Collection is an important element, so we have solutions around collections, which gives the lender a view that if an individual present in 2 or 3 loan accounts in different companies, where is he paying, where is he not paying, is an intent to pay, capacity to pay. So all those analyses are available for ensuring that you're able to collect the money that you have dispersed. I talked about portfolio, I talked about fraud. I think these are critical elements of the entire journey. So as a bureau and as an analytical company, we have solutions for every stages of this journey of decisioning that any fintech will do or any lending institution will do. And all the solutions at the moment are all API enabled, so it plugs into the digital journey seamlessly. The fintechs build platforms. They have an idea, they build a platform. But the key thing is to be able to make decisions on those platforms. And what enables decisions is the data and the analytics that we power. That helps you to make the right decisions. It's all about, if it's a lending platform, all about lending more at lower risk. That's all, it's the sum and substance of the story. If you can help the fintechs to lend more at lower risk, I think we have achieved our objectives as organizations providing service. So that's briefly on the broader journey part of it. So there are some of the technology platforms that we have, which we are just launching in the Indian market, which will, in some sense, help fintechs to bring their idea to life. So if you have an idea, if you want to test it out before you make the large investment, we potentially have a platform which can be leveraged to test the idea in the marketplace. I'll talk a little bit more in detail about that platform. So it's a cloud-hosted platform. Absolutely secure in terms of the way it operates. It's scalable, and so a lot of analytics that are available. Then there are policies that are defined in the platform, so that you don't have to start thinking about policies that need to framework. So this is broadly how it looks from a solutioning standpoint. And again, back to my earlier comment that if you have an idea, this is a platform where you can test it out right away. So to see whether the idea works or not. So the first thing starts with the LOS system, right? Or the interface that you potentially will have for your clients. then potentially you need to have pre-built rules for decisioning. So we have pre-built rules already hosted. You can choose to take that, choose not to take it, choose to define your own rules. It's also flexible and agile from that point of view. So if you can, you have to do the verification online. So we have connectors that are available for verification into multiple data sets. You want to use PAN verification, we have connectors readily available, voter ID connectors readily available. So from that point of view, the verification tools are already ready to go. The bureau check is a standard one. You can plug into an Equifax bureau, pull the bureau data into that. You can host models that if you want to host models which will potentially say, how do you rank this particular application? So the bureau, as a bureau, we will give you a credit risk score, but lending institutions also will look at the rest of the application data to make a decision. So if you want to really make an application score, so you could also host your application score on this website, on this platform. We also have ready to go application scorecard which can be used, but you can also host your scorecards. Another example of model that I would like to talk here is, the patience level currently is very, very low. We want quick decisions. We want to move faster. We're searching on a search engine. If you don't find an answer in the next 30 seconds, we move on to the next slide, next screen, next screen, next screen. If you look at any of the computers that are open here, there are 25 screens open, right? It's just that, our patience to wait for information is very, very low. So the same thing happens in a lending platform. If you ask more questions to your customer, the lesser are the chances of you keeping them on the platform. They will move on to the next platform. So we have something called an income estimation. So without asking somebody's an income, can you estimate the individual's income? This is not a precise income data. This will give you an estimated income to give an in-principle approval. You know whether the journey should continue, journey should not continue. So you can estimate an income online. You can also estimate a potential EMI capacity online. How do you do it? Because we also know what is this existing EMI obligations in the bureau and what is potentially an income, what is this capacity to take an EMI. So again, online happens in about a second or two, you get this response back onto your platform. So these are ways of improving the customer experience, right? You don't ask too many questions before you make a decision. In principle, you're okay with it, you make a decision to give a loan, right? Then, you talk about pre-built rules, so the rules depends on your risk appetite, and if your risk appetite is good, you build liberal rules. If risk appetite is not very good, you build tighter rules, So that's all about rules that you want to build, but, we also have, based on our experience, we have pre-built rules that are available. Choose to use it, choose not to use it, but that's left to the individual who wants to test his idea on this platform. Finally, it leads into a decision and then it plugs back into the LOS. So the complete platform which enables you to plug into multiple data sets, it's powered by a technology called Equifax Interconnect. This is a globally used platform. What we've done here is to extend that platform to create this end-to-end solutioning for fintechs in the country. And we're just about launching this. Already there is a lot of interest in trying to use it. There are some fintechs who have actually signed in advance for these platforms. Considering the agility with which it works, I think that's the beauty of this platform in some sense. So that's broadly what we do for fintechs in the country. Being a bureau, being an analytical company, I think we can talk for much longer time, but I'll stop here. If there are questions, more than happy to answer questions. Am I on time?
Okay, so we're, okay, there's a question right there, yeah. Just 1 second.
I wanted your insight on two things. One, how is the fight for privacy across the world changing the alternative credit score methods, especially those relying on mobile phones, social media, or geo-tagging and everything? Second, how is, in your terms, in your view, how is psychometrics or individual focus human behavior studies doing in terms of determining credit scores of people who have never been underwritten before in their entire life? Thank you.
Thank you. Good questions. So on the first one, so the way the trend is, individual is the owner of his data. That's where it's trending, right? It's your data, you own the data. So the entire, the data privacy, data is moving in that direction. What it means is everything to work based on consent. I choose to give you consent, you have access to my data. I choose not to give you consent, you don't have access to my data. I choose to give you a limited consent, that's the access that you have for the data. So that is the framework it's moving. Obviously, we are building technologies which will enable that kind of a framework that is going to come into place. That's a consent-based environment. So that's clearly the direction that is moving. Bottom line is that you own your data. So that's where it is. It's not somebody else who owns the data. So that's the first thing on this. Second, on psychometric being used for new to credit, largely not been present in the ecosystem, but psychometric analysis being used to assess the behavior of the individual who is borrowing. It's another way of verification, so all the lenders do multiple levels of verification. This is one of the indicators as to what it, presents from an individual's credit behavior standpoint. Will he pay on time? Will he pay on 30 days? But you cannot predict all that so clearly. So you do multiple verifications before you get convinced. There is always a risk, right? So you always underwrite at some levels of risk. But all that we all want to do is reduce that risk level. And this is one of the good ways of doing it. Right? How is that doing in India? Very early stages. So very, very early stages. So traditional data-based verifications are really, really moving faster. That's moving really fast. But some of these newer ideas are, possibly taking a lot more time. This psychometric requires presence, right? And so especially in this platform, you don't see your customers, right? You transact online. So it's very difficult to apply some of these models on an online environment. What can work in online environment is, which is purely a data-based decisioning, right? You have data, you have analytics, you have models, you run on it, you make decisions, right? So that's what it runs very, very quickly. So.
Okay, I have a question. Hello.
Okay, this will be the last question for this session. If you have any questions, please save them, and sir will be taking right till the end, and you can always ask him later. But we'll go ahead now that you have the mic here.
I wanted to know, how do you calculate the risk factors in terms of the NPAs? Is it the bureau's responsibility, or is it the lender's responsibility?
Okay. Tough one for an afternoon. So as a bureau, let me tell you what we do as a bureau. So as a bureau, we aggregate data, present the data and analytics back to them. So decision to lend, not to lend is of the lender. It's not ours. So responsibility is there. So we present the facts as the facts are, and we present the different cuts of the facts, and we also apply models to be able to give you directional view, but the decision is yours. So we play that role. So aggregated data, present it back in a form that is easily consumable for making decisions. Thank you.
Great, thank you so much. That
Thank
was
you all
a
for your time.
wonderful session. Round of applause for KM, sir.